Hey folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond at the Contrarian Trader. And what we're going to talk about today are positions that we took off the table last week. We're going to talk about our best stocks for the coming week. I spent some time this past week over at the Certified Market Technicians Association, the CMT Symposium. A really great time. I met some friends over from TrendSpider. They're a brand new charting software. Really good stuff, next level stuff. You're going to begin to see me integrate that charting software into future tutorials. I love to get feedback from you on what you like about the software, what don't you like. Dan and Jake over at TrendSpider, great guys. Really enjoyed having a conversation with them, and you'll be hearing a lot more from those guys because they are really taking charting to the next level. I'm really excited to be doing business with them, and they will be sponsoring our future best stock charts. Also, I finally got an opportunity to meet Ralph Acampora. If you're not familiar with Ralph Acampora, he is a legend in technical analysis, a great guy, and he explained to me why my mother is my favorite parent. Why nobody else will love me more than my mother, and the reason is that because the first three letters of momentum are MOM, and I thought that made sense. So. Ralph Acampora, a great guy, a witty guy, a really great association meeting. I would encourage anybody, please, if you're interested in technical analysis, you want to network, join the CMT. Great people, very knowledgeable, and they really make you lift your game up. So a great time, and thanks to all the folks over there for putting that function together. All right, so how was our week last week? We booked profits in NUGT. That was a little over 40% profit on NUGT. A nice trade. We opened up this position back in the fall of last year when nobody wanted NUGT. The dollar was rallying. NUGT was getting thrown out like a baby with the bathwater. We also closed out last week the EDC, the Emerging Markets ETF. We booked a nearly 25% gain on that one. These were core positions. I'll talk to you about why we got involved with them and why we got out of them and what we're looking to do with them as we move forward. And to be honest, we already began buying back our NUGT position as we saw strength late last week. We'll talk more about that. And then after we get done talking about the positions that we took off, we'll talk about the trades that we're looking to put on in the coming week. So let's get to it. Let's go to the charts. All right, we'll begin first with the Emerging Markets ETF, the EDC. Now, if you don't like the volatility of the EDC, it makes perfect sense to me. You need to be able to sleep at night. So if you want to have exposure to emerging markets, and if you're worried about a trade alert that I send out, it's just too volatile for you, simply buy the EEM. Directionally, they trade in the same direction, right? It's just that you have less volatility with the EEM versus the EDC, if that makes sense. So we bought EDC back here in December. We started building a position. We incrementally added to that position as we saw that we were correct in our assertion that the shares would move higher. We predicted that the emerging markets were undervalued and that we would see a rotation into emerging markets. I think that we're still in the early stages. And you may be asking yourself, why did you book profits? My concern is that we had a dollar that was consolidating. The past couple of weeks had been strong, and I was worried about a breakout in the dollar. It didn't happen last week. I'll talk about that chart in a moment. And I did want to book profits into resistance out of concern that we would be stopped there and we get a pullback. It didn't work out that way. What happened is that we did break out above resistance. So I did not get out at the highs of the week last week, but still, I booked a 25% profit. You can't complain about that. So what we're looking for is for the EDC to consolidate here, and then we'll look to put that position back on. But as we began opening our first initial position back here in December, we're going to do the same thing. We're going to build in increments. And as we see that we're right, we will begin to add more to our position. Because what concerns me here is that you have so much overhead supply. If we were at all-time highs on the EDC, I would have said forget about it. Let it run. Put a trailing stop loss order in. Let the shares run. Let the market take us out. That's not the case right now. With the EDC, you have a ton. Let's go to a weekly chart. you have a ton of overhead supply going back years. Okay, so when you have a profit, don't be afraid to make it real. And you will get your pullbacks, especially if you're booking profits into strength. You know that in the coming days and weeks, you're going to get a pullback and you'll be able to buy back in on a nice setup and enter on your own terms. Not chase the stock. Don't chase the stock, or in this case, an ETF. Now, we did break out last week on both a weekly and daily basis, so that's good stuff. And that, yes, is a reason to go buying some EDC this coming week, so it's on our watch list. Stokes on a weekly basis are looking good. They're rising. RSI is rising. There's nothing left to like here. Volume could have been a bit better, but net still a very good chart for the EDC. Now, we also booked profits last week in NUGT. That's the leveraged ETF putting you long of the gold mining stocks. If you don't want that kind of volatility and you want to trade along with me, simply buy either, if you want to buy gold, the GLD, or JNUG, which is the junior miners, and that's less volatile, not as volatile as the NUGT. Let's go to a daily chart. Now, with NUGT, we opened up this position way back here in the late summer, early autumn, and we were buying with reckless abandon at lows when nobody else wanted the NUGT. And when we rallied from here, August 16th through to the 29th of August, you could see that Stokes were putting in higher lows. Then we pulled back. And despite the fact that we broke down to new lower lows, what were the Stokes doing? They were putting in higher lows. So you had a bit of a positive divergence going on with the stochastics. The same deal was true here with RSI in that we were putting in higher lows. So I was seeing that, and I predicted that the dollar would correct. And if we had a correction in the dollar, then we would ultimately get a rally in NUGT. And we were proven right. And we were buying aggressively back here when the shares were just getting thrown out like a baby with the bathwater. And we saw a handsome rally. The problem began here when, after a nice rally, we stalled out. We flashed a bearish key reversal on the day. That was the 27th of March. And I was concerned about a breakdown below these two key support levels. And unfortunately, we got stopped out here on the 1st of April. And I didn't want to get stopped out. I would have stayed long, but you have to have your rules, right? Because this is a breakout point failure. We had broken out here on the 21st, and then we broke back down to within a trading range, and that's not good. So fast forward to the 3rd, and we saw two sequential up days, and I was being asked by members, hey, Bob, the shares of NUGT are rising. What do you think here? Do we get stopped out too early? And I said, no, I don't think so. And I was looking at it. I even posted this in the forum. It's still posted in the forum, an image of the 2-hour chart right here. And I said, guys and gals, we are seeing, yes, strength, a dead cat bounce off of a retest of support. But it looks as though we have a lot of resistance up here, and I think that it's a dead cat bounce. And sure enough, on the 4th, we broke down. And that's what we were looking for. The problem for me was twofold. One, when we gapped down, I was at the CMT symposium and kind of out of touch for that morning. And two, it didn't hit the price level I was looking for. Ideally, I was looking for a 17 handle on NUGT, and I would have gotten back involved with it. Now, we did ultimately buy some NUGT back by the end of business on the 4th. And you may be asking yourself, why? What'd you do that for? The reason was this. We had a bullish key reversal, a bullish engulfing, aka an outside reversal day. This is one of the most bullish candlesticks that you will ever see. And we rallied up and through resistance, and we closed right at the highs of the day. So, excellent price action, Excellent volume action, exactly what you want to see. Now on Friday, what we did is we pulled back. We did a retest of support. Now that's very critical. We retested what was resistance. It's now acting as support. Excellent follow through. Yes, we didn't make a new daily high. No big deal. It would have been nice, but it wasn't mandatory. We wanted to make sure, because we're OCD. Traders are OCD, obsessive compulsive disorder. We want to retouch resistance levels to see whether or not they're going to act as support. In this case here, it acted as support. I think NUGT is going higher. Members, we're going to be building on this position more tomorrow on the week ahead commentary. Let's move now over and into some other symbols that we're watching. And one of them is another Direxion leveraged ETF. We'll go to the weekly chart of LABU. This puts you long of pharmaceuticals, and you could see that last week, actually 2 weeks in a row, we had a bullish key reversal on the week. Okay, so we were in a triangle formation, a very nice tight consolidation. We retested the lower band of support here the week of March the 25th. We broke out last week, so that's a buy signal. All right, does that mean you go running in on Monday morning, and if you plan on buying 500 shares of LABU, do you buy 500 shares? No, absolutely not. Definitely not. We have a weekly breakout, no doubt about it, but you want to build in increments, especially with leveraged ETF, folks, right? So please be careful. Members, we're going to talk more about LABU, NUGT, and the EDC tomorrow on the week ahead commentary. I love the price action here. I think LABU is moving higher, but we need to talk about strategy. Now, sticking with this chart for a moment, you have Stokes, which are rising, RSI rising, exactly what you want to see. So the path of least resistance is to the upside. We do have some overhead supply here. Buyers back here, back here. They're going to want their money back. They're going to sell strength. So again, you want to be disciplined and you want to buy when the market sends you a signal, when the time is right, whether it be a bull flag setup, whether it be a triangle consolidation, whether it be a pennant wedge formation. Who cares? We'll identify it. We'll buy on those breakouts, okay? So please be careful. Let's move on to, we'll come back to Roku. That's a short. We'll begin with our long trades, planned long trades. We're going to go over weekly charts here. Members, tomorrow on the week ahead commentary, we're going to do a deep dive into all of these symbols going into recap of weekly. Then we'll do a deep dive into the daily charts, talk about setups, and then perhaps even into the intraday charts when necessary. So weekly charts for the purposes of best stock charts. MGE Energy, a bullish key reversal last week. We are in a very, very tight trading range. We closed very close to the highs of the week. I think that we are breaking out very, very soon here. You have Stokes, which are rising. And you may be saying Stokes are above 80. Does that mean they're overbought? No, don't follow that ridiculousness. If you have Stokes that are above 80, it means that the shares are strong. The price performance is very good. Worry about when the Stokes are putting in lower highs and lower lows, but the price is still going like this. That's when you worry. Okay, that's a negative divergence. So right now, for the purposes of this conversation, Stokes are quote-unquote, yes, overbought. That does not mean that you ignore the shares. The shares, in all probability, are going higher. So MGE Energy, bullish. Next chart up, STOR, Store Capital. Very similar to the prior chart. We are in a very tight trading range. We have Stokes, which are overbought. That's just fine. It's just an observation that we make. We want to make sure that they're moving up. We want the lines on Stokes moving up, okay, or flat. Good stuff. We did not put in a new weekly high last week. We have resistance at 33.76, so obviously that is a resistance level. The week prior to last, we put in a all-time high of $33.76, so we took our crayon out. That's obviously a resistance level now. The beautiful part about this chart here, or this stock, is that if we break out to new weekly highs, meaning we break out and above 33.76, there's no overhead supply. There are no sellers from 2 years ago, 3 years ago, waiting to get made whole. This is what you call, on a breakout, clear blue skies, no clouds, no, clear blue skies, smooth sailing, okay? It's great stuff. So we're looking for a breakout here. I believe that these Stokes are going to continue higher. RSI is looking good. Our volume last week to the downside was below average. That's what you want to see. We retested the support level, which is great stuff. The prior week's up volume was above average. That's good stuff. Now, I spoke earlier about negative divergences. Now, we are seeing one here, but that could be because last week was a down week. But let's memorialize it. I don't think it's a big deal, and it's not. So, ultimate oscillator, what we did here, and this is why I just did what I did. Right? So, we had a down week last week, and ultimate oscillator pulled back. It pulled back actually beginning in February, late February. It's been trending lower despite the fact that the shares were moving higher. So that's a negative divergence. So what you want to do in a situation like that is you want to watch your lower band of the rising uptrend channel. Did it break? And the answer is no. We bounced off of that lower band of support, and the trend is still intact on the ultimate oscillator. So that's still good stuff, not bad. We're looking for a breakout here. We really need to see a breakout on ultimate oscillator, confirming a breakout on price. So that's my only concern here with this chart. I think otherwise we're looking thumbs up here for STOR. The next chart up, big yielding stock, PBT, Permian Basin Realty. Beautiful yield on this thing. Weekly chart. Again, members, we're going to talk about daily charts and strategy tomorrow on the week ahead commentary. So stick around. Check it back tomorrow on the blog. It'll be posted there. And plus, on the website, in the members areas, I'm going to have entry points, target points, price points at which we want to look for profits to be taken, and stop loss points. That'll be published on the watch list page. So check that out. We are in a beautiful, ever-tightening triangle formation. And last week we attempted to break out. That breakout was rejected. No big deal. The consolidation is still very, very healthy. Look at these bottoming tails here. Beautiful. The week of the 25th of March, we rallied off the lows of the week after retesting what was resistance back here in November. It was support back here in August of 17. It acted as support yet again. So, OCD, obsessive compulsive disorder. Traders saw that. Aha, okay, the market sent me a signal. This support level is going to hold. And they tried to take the shares up last week. Not enough bulls interested in the shares. I think they're probably going to break it out this coming week. RSI flattening out, putting in higher lows. Thumbs up there. Exactly what you want to see. Down volume last week was low. That's a thumbs up. That's what you want to see. I think these Stokes here, they're going to try to hook back up. So I'm liking the setup here. Members, will talk about strategy tomorrow using the daily chart on the week ahead commentary. So check back. The next chart up, VTR. This is Ventus Inc. I'm using a monthly chart here. The reason why I'm using a monthly chart is to illustrate the beautiful consolidation that we're seeing here and the historical resistance that we have going back to, what is it, 2016. So we're stair-stepping higher here. The problem for the shares right now is that we are very close to a breakout point at the, let's call it 65.84 level on VTR. RSI, beautiful. This is just beautiful. Higher lows. Let's go to a weekly chart. Okay. Let's throw some lines up here. If you're new to technical analysis, it's critical that you have excellent charting software such as TrendSpider or StockCharts.com. Okay. So what we're seeing here is a nice orderly consolidation. Okay. So now we have a weekly chart view. Now we can do some analysis. All right, so weekly chart, RSI is stair-stepping higher. We are putting in lower highs, but that's okay, right? We're in a consolidation, no big deal. What we want to make sure of is that as we begin to break out above resistance, that we get a confirmation on RSI. And in fact, you may see RSI break out first. That's an indicator leading price performance. Remember, RSI is a leading indicator, okay? So many times you'll see RSI break out first, but most of the times you will see price breakout and then a confirmation by RSI. That's great stuff. So what we have here is, again, recapping RSI, nice tight consolidation, thumbs up, good stuff. Now on price, what we have is two resistance levels. One is a secondary. This is your declining upper band of resistance, which is connecting your lower highs. Now, what we did back here in February is that we broke out above the prior high. The problem is it couldn't hold those gains. It couldn't hold the breakout. And we pulled back, retested the lower band of support. Again, traders are OCD, right? So if you can't hold a breakout, what are they going to want to do? They're going to want to pull back and retest the support level. So we rallied off of that support level up and into resistance. That's where we paused yet again. So we could consolidate here another couple of weeks. I'm not predicting a breakout next week per se, but I wouldn't be a bit surprised. So if we get that breakout, would I be a buyer? I might nibble, but ideally, I'm an aggressive buyer up here on a breakout to new all-time highs. And I'm not going to wait for the all-time high to hit. I'll be buying in increments, but I'll be buying more aggressively on a breakout to new all-time highs. Why? No overhead supply, right? That's the beautiful part about knowing the charts, knowing your historical resistance levels. Monthly chart here again. Remember, no overhead supply here. So know your multi-period time frames, okay? Understand, if you're using a daily chart, you have your nose too far into the weeds, okay? You're not getting the big picture. You need to pull back to a bare minimum, a weekly chart, if not a monthly chart. And I'll use quarterly charts to confirm that we have no overhead supply and where we have support and resistance levels. So please, I know I could speak about this all day long. Multi-period charting is the key to success as a technician. So we are looking good on this chart. Members, we're going to talk more about VTR tomorrow on the weekend commentary, so check back tomorrow. And of course, I'll send it out via email as well, the commentary. All right, now we're going to talk about shorts. Now, we shorted Roku for a profit a couple of weeks ago. It wasn't a big profit, but it was a profit nonetheless. We scalped it. When you're shorting a stock in a market that's in a bull market, you don't want to stick around long if you have a profit. You want to scalp the profit, move to the sideline. So we shorted it here, I guess 2 weeks ago now, here. And last week, we moved higher, and then we flashed a bearish key reversal on the week. Now, that's pretty bearish stuff. So we're going to be looking to short Roku again. Look at this volume. This is the market sending you a signal that there's something going on here. There's something wrong with this company. So members, we'll be talking about Roku and our strategy for shorting tomorrow on the weekend commentary. And again, the market is still in a bull run. This is not going to be an attempt to hit a home run on Roku. We're looking for singles and doubles. If we can make 5-10% a hit, great stuff. We'll move to the sidelines. I'll take that all day long. When I'm shorting a stock in a bull market, we're making that kind of money, thumbs up, good stuff. The next chart up, AutoNation. I spoke about AutoNation a couple of weeks ago. I said, I was talking out of both sides of my mouth. I could either go with AutoNation as a long or as a short. Now, the reason is that we were retesting support last seen back in December. And in fact, the week of the 11th of March, we actually breached this lower band of support, the prior support level. But we didn't get a follow through to the downside. We didn't see the floodgates of selling open up as I had expected. It didn't happen. We gapped up the following week, an inside week, and we rallied. So I said, either this was going to be a double bottom setup or a W formation, and you would buy the shares, or it would break down to a new weekly low, and then you see the floodgates open up. What happened? We rallied, and in fact, we even broke out on a weekly basis. The problem is with AutoNation is that we reversed the close off the highs of the week last week. Now, you may be saying, Bob, you're always talking about a retest of support. Might that be what we're seeing here? Absolutely. Okay. But on a daily chart, I'm a little bit more concerned about the shares breaking down further. So while the weekly chart does have a breakout, and I will pay it a lot of respect, I will be watching the daily chart to see whether or not we could scalp a profit to the short side. Not my favorite trade relative to Roku, but it's an interesting trade nonetheless. And where I would be really bearish on AutoNation is if we break back down below this lower band of support here. Meaning, if we get a bull trap or a breakout point failure and we begin to break back down and fail to hold the support level. Remember, while we broke out last week, we're still putting in lower highs. We haven't broken out to new higher highs yet. And in fact, we've been putting in lower lows. Okay, so we did not hold the lows of December. We broke down to new lower lows. Granted, by 4 cents, but still technically a lower low. So this is a chart that while it could be longer term stabilizing, this is by no stretch of the imagination a chart that is an investment at this point in time. I'm looking at it as a speculative short trade right now. Members, more to come tomorrow on the weekend commentary. The next chart up, another short trade. Greenbrier Company. We rallied last week. We were stopped dead at resistance. This is a weekly chart. Now, again, for you traders out there who are using only daily charts, you got to keep in mind that where you should have been looking to book profits last week, where you're trading GBX, was right back here, where the shares found support at this very same resistance level. You would have known to book profits here because prior to this retest of support, November of 2016, it acted as stiff resistance and support through August of 15 to November of 15. There's a lot of history here. So last week we were rejected at that resistance level. We did hold support. What we're looking for here is a continuation breakdown. If it doesn't come, so be it. We don't short it. So members will be talking about a daily chart tomorrow. We'll talk about strategy for shorting GBX. And again, if you're not currently a member, sign up for the 14-day free trial offer, please. And that is it for this week, folks. I hope everybody has a great remainder of your weekend. Please subscribe to my channel. Give me a like. Leave a comment. I'll definitely get back to you. Enter your email address on the website. We'll send you out some free video tutorials of my 5 most powerful candlesticks, and we'll get those out to you. Learn how I like to use the candlestick formations. Everybody have a profitable trading week, and I'll talk to you soon.